Good morning, everyone, and welcome to our series Fintech Fridays, brought to you by BDO Australia. In our webinar today, we'll be discussing how fintechs can leverage compliance as a competitive edge and how tokenomics and digital assets are unlocking new forms of value in the sector. For those that don't know me, my name is Tim Aman. I'm BDO's global fintech leader, as well as our national financial services leader here in Australia. Before we get started, we'd like to acknowledge that we are hosting this webinar on the lands of the Gadigal people of the Eora Nation and the traditional custodians of this land, and pay our respects to their elders, both past and present. We also acknowledge the traditional custodians of the various lands of which you are now joining us from, and pay our respects to all Aboriginal and Torres Strait Islanders people joining us online. I would also like to quickly draw your attention to the housekeeping slide that is currently showing on your screen. To start, you are all automatically muted, but we'll be accepting questions throughout the session, and you can submit these using the question tab. If you sent through a question when you registered, we'll do our best to answer that question today. We have an action-packed discussion today with our two guests, and we won't have time to take additional questions during the session. But if you have any other questions, please drop them into the chat and we'll follow up with you after the webinar concludes. If you are experiencing any technical difficulties, please click the support button, which is one of the bottom tabs on your screen. And finally, this session is being recorded, and all registrants will receive a follow-up email containing the slides, a link to the recording, access to register for future sessions, and the speaker contact details for all of us. As the global leader of fintech at BDO, I've been working with innovative companies across markets, from early stage to established players navigating complex regulatory landscapes, and I know from experience that fintech is a driving force in challenging the status quo in financial services and reshaping the industry. Here in Australia, we're seeing a fintech ecosystem that's punching above its weight, but with all the opportunity comes complexity. That's why we're here today to discuss themes around compliance as a competitive edge, and tokenomics and digital assets are also critical for us to discuss in the industry. Today, we'll explore how these themes are playing out in Australia and globally, and we'll hear from two exceptional leaders, Katrina Donaghy and Neale. Our guests bring deep experience and insight into what it takes to thrive in this evolving landscape. So now I'd like to introduce our guests. It's my pleasure to firstly introduce Katrina Donaghy, Regional CEO for Asia Pacific at Waterledger, a company at the forefront of using blockchain to solve one of the world's most pressing challenges, water management. Katrina brings a wealth of experience as a fintech innovator and blockchain advocate, and her work is helping redefine how digital assets and distributed ledger technologies can be applied to systems in the real world, especially in areas like water markets and environmental stewardship. Katrina brings deep expertise in navigating the intersection of technology, regulation, and customer experience, and insights into how tokenomics and digital assets are unlocking new forms of value, both in financial services and in other sectors where transparency and trust are critical. Thank you for dialing in, Katrina, up in Brisbane, and welcome.
Thank you, Tim.
I'm also pleased to introduce our second guest, Neale, ex-CFO at Mixed Martial Arts. Neale is a highly accomplished executive with a proven track record in scaling high-growth companies and navigating complex capital markets. Neale has held several senior leadership roles across fintech, medtech, infrastructure, and has successfully led companies from the start to the scale-up, leading them through IPOs, capital raises, and global expansion, all while building high-performing teams and driving enterprise value. Neale brings a strategic lens to compliance, governance, and growth. His passion for building category-defining companies and his deep experience in both private and public sector markets make him an invaluable voice in today's conversation. Thank you, Neale, for joining us on Fintech
Thank
Fridays.
you.
Yeah.
Thanks.
So, sorry, that was a bit of a long-winded introduction on a few different things. But very happy for both of you to be joining here, on Fintech Friday. And what I wanted to talk a little bit about compliance. I think in terms of, obviously, it's a big buzzword. And maybe Katrina, maybe just give me your initial views in terms of what compliance means to you in terms of making a company ready.
Well, compliance is actually essential to our DNA. When you're dealing with highly regulated assets or even building a company that's trying to move the dial in the digital economy, you have to have it in your DNA right from the moment you start. And obviously, we all understand when we start building companies, we focus on shareholder value, we focus on our data room, and we spend enormous amount of effort trying to engage with investors. But the last thing that we want to experience is that when they go through their due diligence, that there's red flags that have come up because we're not actually meeting our compliance obligations. So I think what I see is that compliance needs to be held up as much as when you're doing your product design or creating that consumer confidence.
Yeah. And so, Neale, I guess, how do you, if you look at compliance as a strategic lever for growth and investor confidence, how would you, what's your view on that?
Yeah, no, great question. I think from my perspective, I see that compliance as a platform of trust. It's also a measure of operational maturity, and it's also a tool that enables market access. So give you an example, or I've got two in fact. When you think about Stripe, they were able to scale to 40 plus markets, and that really happened purely because of the regulatory alignment to these markets that enabled onboarding of clients very easily. That was one. The second one, which is a recent example, which is the Circle IPO, they've done an incredible job. Their proactive position and posture on USDC is a testament of taking investment in compliance and converting that to billions of dollars in market cap valuation. So yeah, I think it's a critical platform.
I mean, it's quite interesting because I mean, given our backgrounds, I guess, we take compliance quite seriously. But I guess maybe, Katrina, in terms of, in your experience, how do you get everyone in the company to focus on compliance? Because sometimes, if we're dealing with founders or CEOs that might not have that same lens, what's been successful for you to get people to I guess, listen to you in terms of the value that compliance can bring?
Well, it's so correlated to, or so connected to scaling. We have to work from the lens of getting trust from our customers that we work with, which is government. And we need to be demonstrating to them that we take their world very seriously. We can't be cowboys. And plus, if we're not going to take compliance seriously, we wouldn't be here after 9 years of trying to do what we do. So it's a narrative that's built into our tech stack. It's built into our daily discussions. We talk about data governance ridiculously all the time. And we understand how do we actually put the customer's data at the center of what we do, ensure that we actually can get their trust when we're actually scaling or building technology that is going to solve their problems. So it's not a side conversation. It's always been inbuilt. And I remember in the early days when this, which I know we'll go into this, but when we started designing the global standards for blockchain technology, I was one of the first people putting up my hand and saying, let me be in the room so I can actually be able to understand this. So it's just a constant narrative, but now it's just ubiquitous in terms of how we work.
Yeah, and I think we'll talk a little bit about those heady days of the blockies when we get to that part of it. But I think it's a challenge, I guess, with scale up companies and again what I see, and maybe Neale, you've seen this as well. Some of the companies have been at is sometimes compliance is a little bit of an afterthought. I think and I think how have you dealt with that with some of the companies that you've been working with?
No, yeah, it's definitely been an afterthought. But I think one of the key measures that we introduced was how do you build compliance within the product and engineering teams, and how do you make it a performance metric, right? So I think that's been really helpful and critical, and also creating a culture of proactive engagement with regulation or regulators. I would say those are the two key things I would say has really helped the companies that I've worked with. And if I also give another example, Plaid, which is a very famous key player in the open bank movement, they were proactive with data privacy as a topic. I mean, they were very good in terms of adapting to new regulation around data privacy. What that meant was it translated to things like product suites that gave a lot of consumers confidence and trust that the data they hold, they control. What that means, it translates to a valuation of nearly 30 billion. And they had acquisitions like players like Visa turning up and knocking on the door and saying, hey, we would love to buy you. Different reason they didn't get through, but that's another measure of how compliance becomes a core. As Katrina said, it becomes part of the DNA.
Yeah, I think you touched on open banking, and that sort of, I guess maybe Katrina, from your perspective, I think when open banking first those words were kind of uttered here in Australia, it seemed quite optimistic and bullish. There was Fintech Australia had a CDR session yesterday here in Sydney. I guess what's your view in terms of the speed, in terms of the adoption of things like open banking, because trust and data retention is such an important to end consumers.
Well, I think yes, the CDR happened yesterday, but I recall back in the quite a few years ago, the roundtables at Fintech Australia's Intersect festivals, whereby they were doing something quite different, bringing the regulators into the room, doing roundtables to look at how do we actually co-design fit-for-purpose regulation that's going to enable innovation to scale, but also not hinder or put anxiety. I think there still is probably a long way to go in terms of consumer education. But I think what we've done in Australia, we've taken very pragmatic, risk-based for a lot of reasons. A lot of people hate that, especially in my industry. But it enables us to know exactly what our guardrails need to be, and allows us to code and build technology that we know that we're not going to get to the end gate, and then we've got technical debt and legal debt because we've actually missed something through that processes.
Yeah, I think it's quite interesting, because I think one thing I love about the fintech ecosystem is sort of the passion to do things differently, but with that comes sometimes regulation and following rules. And some of the fintechs that I met, they don't really like to follow the rules. I mean, not in a bad way, but just in terms of they like that ability to go as far as they possibly can and really be innovative. I guess as Neale, coming back to you, I think in terms of, in your experience, that innovation and that rule following has had a negative impact in terms of the ability to raise capital, or where have you seen that done really, really successfully?
I would say the opposite. I think if you have a posture of compliance, and it kind of allows investors on the other side, I would say, it kind of reduces or reduces the perception of risk in the investment. I think that's the first thing. The second thing I would say is it also predicts potential reduction in due diligence friction. And I think I've also seen it where, from a valuation perspective, investors are ready to put a premium, right, to the valuation, because you've got the right posture, you've got the right compliance, you've got the right governance. And I would say the last bit from my side, I've also seen it where investors looked at as you've got the foundation right, so scaling and partnerships, maybe locally or globally, is going to be a lot more easier, relatively. So I've seen that positively. I mean, my example of Circle is an example of Plaid. I mean, these are great examples. Airvolix, which is a local company, is also another great example where I would say, if compliance done right, can also give a great, let's say, appeal to an investor.
Yeah, and I think again, compliance. I mean, not to beat a dead horse on
Sure.
compliance, but I think with a lot of companies that I've been working with, they have aspirations to list, for example, or expand or become more global. But if you don't have that DNA embedded on compliance, you're not going to last a long time. I think we've seen a slowing down of the IPO market, so this does allow companies to become more ready. I guess maybe for both of your perspective, I guess, what advice would you give to companies that are thinking about going through the IPO process in terms of taking this time that's a bit slower in terms of that market, in terms of being ready? Maybe I'll ask you first, Katrina, then I'll come over to you. Neale.
I think this is really Neale's expertise, but I know from our experience, when we've looked at where we're going to be, what sort of company we're going to be in the future, and what's our exit strategy is going to be.
Yeah.
But it all comes down to the top leadership, board, governance. You've got to have that inbuilt right from the get-go. Who's on your board, how your cap table is structured. We all know the demons of the cap table. I have spent many years alongside startups whereby the things that kill them is basically their capital table. So it's also leaning into good advice right from the get-go. We get so focused on product and tech that we forget that these are the things that we have to build into our company right from get-go to be a sustainable company that's going to thrive in the future and to be an opportunity to consider the luxury of doing an IPO or an M&A or things like that.
Yeah. Maybe Neale, coming over to you, I guess, what are some of the pitfalls that you're sort of seeing that people that are thinking about that IPO journey should be listening to avoid?
Katrina covered a lot of key points there. I guess the first basic thing I would say is that people don't appreciate the transition from private to public, right? And the scrutiny is across everything. And you can never time markets. You can never time, you can't control a lot of the variables that happen in the capital markets, in essence. So what you can control is your posturing internally. And as Katrina mentioned, governance is important, leadership is important, documentation is important, so you can get through DDs. And making sure that you're ahead of the curve with all the regulation. One classic example where IPO readiness wasn't really great was Robinhood, as an example, right? Leading up to the IPO, there was a lot of fanfare in terms of getting where they needed to get, but they had to pay fines, $70 million of fines. Their prospectus had allocations for future fines, which they couldn't determine. They got listed. There was a lag on the share price. They carried that overburden for a long time. And they just recently, I think, paid another $26 million in fine. But so I guess to support this, I think what I want to leave is you're scrutinized. So take the time where you can actually invest in the right things, get the guidance, get the advice, and start to plug in those holes. And when you get to the actual deal stage and transaction stage, you're running.
Yeah, I think it's probably really important in terms of that readiness piece, because again, with a lot of companies that we're working with that want to go to the US, for example, aspirationally they want to go to the US. Then you have to deal with the regulator, and you might not get the right initial valuation. So
that's right.
Some of the things that I think you need to just have that confidence that if you're going to go to the market, you go into the market. You can't time the market. And I've seen lots of different instances where things aren't completely perfect, but I think once you've decided you're going into the ocean, you gotta dive in. So so maybe Katrina will shift gears just a little bit to talk about Water Ledger. Water Ledger, maybe you can explain a little bit about what you do there, but obviously it's built on blockchain technology, but maybe I'll just let you talk a little bit about the company and how it's been growing.
Yeah, so our journey's been a bit, we started in 2016 in my original company called Civic Ledger, and Civic Ledger was founded after doing a proof of concept with the Queensland government to digitise, tokenise a permit and push that through the Bitcoin blockchain using Colorcoin. So this is a long time ago, a long time ago. But I came from government. I spent 20 years in government, but I was interested in how do we actually bake into an asset that's issued by government that allows us to do something, but has rules and limitations around that? How do we actually make that less friction, but also give auditability and accountability? So we posed these questions to ourselves a very long time ago. And after doing that proof of concept, and we went, we've tokenized a permit. This is an asset. It has ownership. It gets transferred. It's on a registry. That's when we decided to create Civic Ledger. Back in the old days, you were either a block or a chain or a ledger in your name. And then it sort of, in a very serendipitous way, it got us access to the federal government. Back in 2016, 2017, there was a level of curiosity around this tech. A lot of curiosity, and there was a lot of willingness to look at proof of concepts and pilots and things like that. So we had an opportunity to work with the Australian government around water markets, and we thought, well, we've done a permit. It's the start. What can we do? And that led us to actually designing the very first ever tokenomics on how do we actually look at water through the lens of tokens, registries through the lens of ledgers, and marketplaces through peer-to-peer. And then about 12 months ago, we restructured the company, went global. So now Water Ledger Global is in Ireland. Yes, we had to take the intellectual property out of Australia so we could scale. And we're now in the Americas market doing environmental markets. Australia's doing agricultural water. And in South Africa, we're looking at non-revenue water. But it's not like everyone says, oh, that's amazing, but it's hard work. And overnight success, as we say, is 10 years. So scaling into the international markets was huge for us because of compliance. We've just completed our first SOC 2, our SOC 2 Type 1. And that is really the journey that we're on now. So we're able to scale into international markets because we understood the lens of interoperability, standards, security, data governance, all those sort of pieces. So, and we won a government tender to build the very first, to take environmental markets, nutrient markets into the digital age. So that's with the state of Virginia. So we were brand new into the Americas market, but because we had all of those tools to show them that we were trustworthy, they awarded us this government contract. So that goes live in September this year. So we realized that through the lens of tokenization, you can take something like water that has multiple life cycles, but they all start in catchments, and we're able to look at rules and various things like that. There's a lot to it, but we try and keep it as simple as possible for our customers to understand.
Yeah, and I think, we'll talk a little bit about that, as we continue over the next 30 minutes or so. But I think great that you've been able to get into America. But I think, it links a little bit. For those that don't know, I'm originally from America, so I'll claim that I'm American. I think in terms of, but it's that readiness, because I think what we're finding is people, you need that ability to have a SOC 2 report, and it's got to be a good control, sort of environment. If you look around, just obviously things like Qantas, in the industry that you're in, Katrina, I mean, that ability for people to trust the process is extremely important, and I guess maybe just talking a little bit about, you talked a lot about tone at the top, but as you start to get bigger and you start to go more international, how do you make sure that culture kind of permeates, around we have to make sure that this is always best in class?
It's just because we're so pin focused on our customers. Like our farmers at the end of the day in Australia are farmers. They're under a lot of pressure to solve the climate crisis. But where they're concerned is around data. They want to know that their data is not being taken away from them and monetized. They want to be in control of their data. They want to have price discoverability. They want to have access to markets that are trusted. And these are not necessarily new concepts. We all want trust. But the legacy systems that they're actually forced to work with, they do not trust. And as a result, we are not optimizing these very important assets to unlock environmental and social and cultural good. So it's not about, I've always said this, and I've been on record so many times to say, it's not about putting the technology first. The technology is a tool that we have chosen because it's the best in class to solve the problem of market liquidity, trust, depth, asset ownership, and all that sort of stuff. But you need to be pin focused that the problem that you're solving is going to make a better experience for your customer. And so that's the culture that we've always had right from the get-go. Focus on customers all the time.
Yeah. And I think that's really important, because I think, there'll be people that are listening in that don't trust some of these new technologies. And I think that's always a bit of a topic. My mother is a completely distrustful person in terms of online banking. I can't even convince her to do anything on online banking. So we know it's this constant challenge. And every time where we make a step forward, there'll be something in the paper about someone being hacked and losing this sort of data. And then there's always people that will then say, this is why we don't want to change. So I think it's always
a
challenge.
I know, but we just recently had the biggest court case in Australia's history with water theft. Now, if you actually do a deep dive into that case, the whole reason as to why it was because of disparate databases, paper, and no real transparency, accountability. So things were able to be changed because they weren't on chain and there was no accountability. So you sort of go, do we want to stay in that past, or do we want to embrace a future where we actually design markets with the person at the center and give them
Yeah.
those levels of trust and accountability? And really, at the end of the day, we don't need to say the word blockchain anymore. It's
Yeah.
Yes.
like talking about email or
Yeah.
URL.
It's almost like, we've been having a lot of conversation about AI. People
Ah,
are just sort of
yeah.
are going to be expecting that people are using AI. So I think those sort of call outs will start to change. But Neale, maybe just before we move on, just on the culture piece, because I think what have you been able to do that's been quite successful, particularly as companies start to scale up, because easy to talk compliance and culture
Yep.
when companies are small, but what's worked for you in terms of maintaining that culture permeates about the organization?
Yeah, I think, as Katrina mentioned, I think it's about the consumer, it's about the customer at the
Mm.
end of the day, and I think we need to sometimes remind ourselves that they remain the center of our purpose as a business. And yes, you have systems. Yes, people come and go. Yes, you have compliance. You need to understand, but at the end of the day, when you look at all the regulatory compliance, all the elements that are outside, it's really about protecting the consumers ultimately, right? They are trusting you with their money, they're trusting you with their data, they're trusting you with their whatever their problems. So at the end of the day, that's what regulation and compliance is all about. So culturally, I think we just got to constantly remind ourselves that it's about the consumer, and we got to solve for them, and we got to continue to solve for them at the end of the day. And then we just got to adapt. We got to adapt.
And maybe, Katrina, slightly shifting gears, maybe you can talk a little bit about, you referred back to 2016 and some of the stories that you've been on over the past sort of 10 years, but maybe talk about some of the collaboration that you've done, because I think, with some of these emerging technologies, collaboration, you mentioned, kind of government, end users, I guess maybe a bit more background in terms of how you've got people to buy in, I guess, on all sides.
Uh, that needs another podcast.
Mm.
It's if we all knew the answers to that in 5 seconds, we'll be all in a whole different space. It's education. When we first started this journey, it was about going into a lot of government rooms, and they were actually hungry to learn about this because of level of, particularly on a federal level. We worked with IP Australia closely for about 18 months, tokenising patents and creating
Mm.
digital registries and things like that. But I think it's about a level of curiosity, a level of willingness to, from our perspective, is to be humble and not go in there and look like we know everything. That was like it was in the old day. You used to put the developer at the front of the room, and all they used to
Mm.
talk about was the tech, what was under the hood. And from a lens of strategy, if you're a decision maker with regard to where we're going to put taxpayers' investment, I don't want a developer standing in front of me talking about, ERCs and Merkle trees and, compostability. I
Mm.
want to know, how does this strategically fit into my business? And what are the headwinds that I'm going to have to be thinking around in the lens of digital economy? So it's really making sure your language is at the right tone. And then enabling an opportunity for a pilot, which we had to do in the old days, a lot of POCs, a lot of pilots, but then feeding that back into the learnings of how that works, but also finding your first customers and enabling them to co-design with you. And that's what we did through the lens of Water Ledger. And you can find so much stuff on the internet of what we've done over the years in terms of co-design.
Yeah, I think it's quite interesting. Again, if I look back to when I first started to go to Intersect, everyone was walking
Mm.
around in hoodies and things like this, and I look at the two of you impeccably dressed here on a Friday. The mood has changed. There's a bit of a maturation in terms of, kind of that ecosystem. I think that hunger and is still there, but I think, we're kind of moving upscale in terms of how we're using this in the day-to-day world. So that's quite interesting. One final question before we kind of move into digital assets. I guess if you could give one piece of advice to, kind of fintechs that are kind of listening, what should they be focused on from a compliance in their growth strategy? Katrina, I'll start with you.
It has to be the same time you start doing your product.
Mm.
yes, the challenge for us startups is always money. Where do you put your money? Where's your highest value that you're going to get your MVP into the market? But at the same time, you've got to start, and we've got so many great tools now that allow us to do automation that we didn't have all those years ago. But build that in, when you're actually doing your sprints, put compliance-based stories into your sprint. So you're actually building that culture right from the get-go, asking questions around data governance. When do we start doing our SOC 2? What's our cybersecurity? What's our pen test? What's all of those pieces that go into the technical roadmap as well?
Okay, one bit of advice.
Just adding to Katrina's, the way I would say it's not a bolt. Compliance is not a bolt-on anymore, and you've got to shift your mindset from it's not a point of time. You're not solving for a point of time. It's now about continuous monitoring and remediation. So, as Katrina said, just build it into your DNA and into your core value propositions, innovation and growth.
And I think great insights from both of you. We'll move away from compliance and we'll talk about sort of digital assets for a bit. I think, it's quite interesting that my last word on the compliance would be is, I think it's important. I think you both alluded to, you need to get the right advice as you're kind of going through it. So you need to pick the right time to go down that journey. Money is always a bit tight with sort of startups and scale up. So it's being smart about that and building those right relationships and leverage off people that have gone through that process, in terms of, so get good advice, but you are going to have to spend some money, but do it in the right way.
Buckets, yes.
Yeah. So now we'll switch gears to something a little bit more topical. We'll talk a little bit about the frontier that's sort of rapidly changing in the future of financial services, tokenomics and digital assets. From programmable money to asset tokenization, these innovations are unlocking new forms of value and challenging traditional models. At its core, tokenomics is the economic design behind digital tokens. It's about how they're created, distributed, and used to incentivize behavior within a digital ecosystem. It's just not about a technical concept. It's a strategic tool that can unlock new ways of doing business. And they're already shaping how fintechs operate, raise funds, and serve customers. For fintechs, tokenomics offers opportunities to rethink value exchanges, be it through programmable money, asset tokenization, or decentralized finance. But it also brings around complexity, especially around regulation, trust, and governance. Now, probably hitting your sweet spot here, Katrina. Maybe if you talk a little bit about the work, that intersection of blockchain and systems in the real world.
Wow, good question.
Again, another podcast, Tim. Look, we've always seen that the tokenization of real-world assets was going to be the sweet spot when the industry matured, because way back in 2016, the tech we were still on Bitcoin, Ethereum was emerging, the tech was a bit clunky. We could actually use layer 1 Ethereum back in those days, but I think the whole idea is that when you think about tokenization of real world assets, you have to be respectful of how they work in the real world. You can't go and start changing its state because it's cool to do so. Because all of a sudden you're going to find yourself a regulator asking you, you're now dealing with a financial product that's no longer a utility. So I think one of the things that we did back a really long time ago is that we took the time to write a lot of technical papers around our token economics. We resisted the ICO boom, which some of your viewers may not actually remember that. I do. But we did have some successful ICOs in Australia, Power Ledger, Haven, Rocket Pool. We did have a lot of successes, but they were very clear on the utility of the token way back in the old days. But it also caused us a lot of problems because all of a sudden in 2018, nobody wanted to talk about blockchain or work with us. It was a really difficult year. But I guess one of the things about when you tokenize real world assets is understanding the why. Why are you doing this? Because it was so easy just to do ERC20 back in the old days. Yeah, I'm just going to do a fungible token and raise millions of dollars, but I don't know why I'm building these things. But I think that was the core thing. If you're going to start this journey, the first question is, why do you want to do this, and why do you want to use token economics, and why do you want to use this technology? What is the problem you're solving, and how is this going to make a difference, and how is this going to build you as a company that's going to last beyond the hype cycle. There is a lot to this, but I think if you don't know why, then you have to take a step back and rethink about what you're
Right.
doing.
Yeah, and I think maybe we're seeing a lot, obviously, in Katrina's world around water, carbon rights, real estate. But what are some examples that you're seeing in terms of that application to real world? And I guess it's the why, because I think
Yep.
when I kind of first came back to Australia, sort of some 10 years ago, the concept of using a Bitcoin to buy Starbucks coffee didn't make a lot of sense, and so I think so we moved on from that sort of thinking. But in your experience, what are you seeing some good examples of the why, and I guess applying to the real world?
Yeah. I think I'm a big fan of stablecoins right now.
Mm-hmm.
I think the way I think about stablecoins is to banking is what internet was to telecoms. So I think that's going to be quite a revolutionary. I wouldn't say just a incremental innovation. I think it's going to change the way we do real world banking. I think that's going to be incredible. That one, and I think there are particular new examples popping up not only in Australia but also overseas where a lot of companies are trying to unlock illiquid assets, and one being real estate as an example. And I think um, if you can get a blueprint done right there, then I think it becomes a blueprint for other asset classes like art, other forms of infrastructure. So there are companies like P2P.org, which is a non-custodial staking services, which is a very incredible concept where it acts as a fixed deposit of digital assets that you own. You give it back to them, you earn passive income. That's an incredible way of bringing in more institutional investors to start to adopt it. So those are some examples that are out in play. So yeah, it's an incredible time right now.
And Katrina, I guess from your perspective, are you seeing some other? Well, I guess what do you think is the next trend in terms of that real world application? Do you have any predictions on that?
Ooh.
Yeah, nature.
Yeah.
Nature. Nature is the biggest frontier that we are facing right now, because nature underpins all of our economic and financial markets globally. And if we don't understand the value of nature and then build it into our financial institutions, we're going to see a collapse of industries that have been around for generations. Just with the explosion of AI, we're now seeing data centers having, like, there's a now, in West of Victoria, now they're having to look at development applications for data centers that are going to take urban water to cool the towers. Now, in the hierarchy of water in my land, in what I know, human access to water is the highest priority. Now we're going to have to compromise who's going to get the water, because what's moving to its highest value. So nature has to now come into this, and one of the ways of doing this is through the lens of token economics, markets, infrastructure, legal infrastructure, regulatory infrastructure, technology, but the most important thing is governance. And we are seeing global standards with regard to nature, the financial disclosure of nature and standards. But if we still think that nature is over there and it'll be fine, we're in a bit of trouble with regard to where our investment is going. We're a very rich nation in assets. So we need to start to have that conversation with, well, how do we now bring that into balance sheets and accountability?
Yeah, that's a great test bed for real world assets, Australia. Yeah.
Yeah, and I think you're right about the nature. And I think if I look back to where I'm from, Buffalo, I think when people started to migrate out of Buffalo, some old people at that time would say people will come back because we're right by the Great Lakes. So it was the greatest reservoir of natural water in North America. Now, whether or not they moved back there, because I've been back there recently, I'm not sure they'd moved back there, but they're trying to figure out how to move the water, kind of elsewhere. So that's going to be quite interesting. I guess, just sort of switching gears slightly in terms of, tokenomics, how is that resonating with investors? And I guess which type of investor, does this resonate with? Because are you seeing it, the level of sophistication of people understanding the tokenomics? Katrina, you talked about the understanding of the why. So when fintechs are trying to talk to investors, what are some of the pushback that they might be getting?
Yeah, that's a great question. I guess there's a shift now in the markets, and you can credit some of the recent IPOs like the Circles, the other and there are about another 5 or 6 coming through. What it shows is that there's a healthy demand now for institutional adoption, and I think that's a great place to be. And I guess from an investor lens perspective, I think it really comes down to the basics. And Katrina, you can help me here, but I think the first, it starts with the utility. Why is it essential? When you think about a token, why is it essential? What's the intrinsic value? Again, that's going to be critical. Is it compliant? Is it, does it have the governance that's basically the playbook and the rule book? It has transparency, it's auditable. Then it comes down to the tokenomics. I mean, the incentives, is it linked to or aligned to the network's system? I think that's one. And the last two, I would say, is liquidity. There's demand for it, stable demand. And then I would say the last and most important thing is, how do you make money for the business, right? And to keep it sustainable as you go forward. So I think all investors, in the way they're approaching it, is, now they're looking at it as a pure business, right? Yes, there's a feel-good factor about it, and there's not noise, but it's coming back to the basics. Yeah.
Katrina, anything to add to that?
Well, yeah, absolutely. The architecture is everything. Choose which standard do you choose. You have to, above, like, when you talk about it, token economics, and you do take, why are we tokenizing it? What's its utility? Is it a DeFi product? Is it for yielding? Is it for transferring of ownership of assets? Is it a system of record? Those are the things. And then, is it a financial product? If it is, do I need an AFSL to actually trade these assets? These are complex questions. And it's not about just deferring to the code and saying, well, I've written the code, I'm now going to go into the market and it's all going to be sweet. There's a whole lot of that goes around that. And ensuring that you've got compliance by design, that you've got the principles of governance, of interoperability. You can't create a siloed token. You've got to understand how it's going to be moving. What's its state? Is it fungible, semi-fungible, non-fungible? Who's the authority in the transaction to verify that these things, do I have to mint? Do I have to burn? I mean, at the end of the day, this is about solving the problem of the double spend and also bringing liquidity and confidence and accountability. But it's the market architecture is another thing. And it's also, I think where we've changed a lot, or what's happened that's been so exciting, is as we're seeing from the transition over the last 10 years. 10 years ago, we had to do everything, the settlement layers, the payment rails, the onboarding, the offboarding, all that sort of stuff, the custody and all that sort of stuff. We don't have to do that anymore because we've got great companies that have emerged over the last decade that actually take responsibility of key management or custody, payment rails, on rails, off rails, stable coins. And we're able to plug into those other systems now and focus on what we do best. And I think that has now laid the foundations of what we're going to see the next 10 years or 20 years. So that's very exciting.
Yeah, just to add one more thing, I think we have to accept that there's a fair bit of education still to be done, right? So this transition from Web 2 thinking to Web 3 thinking, I mean, don't discount that. So part of that process, as Katrina said, there's a lot of complexity. So how do you translate that to simple words? So there is a set of investors who get it, but there's also this pool of investors who are interested. So are you putting the investment to actually prepare the market, in a sense, is critical.
Yeah, and I think it goes a little bit about, maybe both of you might have a view in terms of Reserve Bank and Project Acacia that came out sort of like last week, in terms of, obviously it's great that they're going to be having some case studies and a bit of a launch there, because I think you've sort of alluded to, Katrina, like, within Australia, if it's a product, then there's license requirements. It's trying to get that right balance between legal, regulatory. There's the change management piece. Then obviously there's the technology. But I guess, what are some of your initial thoughts when you read that paper that came out last week?
Look, it's so exciting. I mean, I used to be a director on the Australian Digital Commerce Association way back in the old days before it was Blockchain Australia. And I remember we are trying to have conversations with the consumer protection, the consumer body, to say, hey, we're going to have to start to educate the Australian public about Bitcoin, about cryptocurrency. And they just looked at us and said, nobody in Australia is buying crypto. What are you talking about? So we can see that way back then it was like, nah, this is not happening. And now we're seeing such rich engagement that it's getting co-designed, like having the CRC for digital finance was a catalyst to actually bringing all parties together Fintech Australia, Blockchain Australia, or now DECA, and all the different forums. But I think, the thing that we started off with as a country was the standards. Australia led the world in the ISO, and it still is leading under Scott Farrell. So we've always been one of those leaders that's looked at rules and standards and regulation and principle based. Yes, there are people in our community who will say we haven't moved fast enough. But I think what we've done in Australia is shown that we can be steady and pragmatic and bring innovation through that's going to sustain and allow Australia to be held up as a world leader. There's a lot of arguments that will probably disagree about that, but I think it's very exciting. I knew all along that we would never have a retail product. That's why stablecoins are now stepping in. But the wholesale products, I think, are really interesting, particularly from the lens of tax, compliance, making financial industries move fast, especially when we can program money. We can actually move assets, title, and money at the same time. Never been able to do that before. But I think the next hurdle is going to be how legislation that's been around for a very long time, that has limits of market architecture in there, how they're going to change. Because in my world, it's illegal to do a T0 settlement. It's absolutely illegal, not allowed to do it. So we have to purposely slow everything down to ensure that we're still compliant to the legislation.
Yeah, and I think maybe I know you were a fan probably of that particular, but what were your initial views when you saw that come up?
Yeah, it's a positive, proactive step, I would say. But it does indicate that Australia will continue to use a very balanced approach in terms of managing with the stakeholders. But it comes back to what Katrina said. I think there's a conscious effort to create integrity or maintain integrity and also give clarity. So I think this is a deliberate, conscious effort, and I think it's a great sign. It's a bit different when it comes to the US. I think regulation catches up to the designs. I think Australia is just going to continue to provide this balance. But again, very positive. Lots of programmable pilots out there. Lots of sandboxes that are popping out. So I think that's positive.
But I think this is also signaling I think because when we all know the financial services industry, financial advisors are not allowed to give advice with regard to crypto assets and digital assets. They're not allowed to. And they want to, because customers are coming to them now and say, can you tell me what I should be thinking about in terms of my portfolio? And they're not allowed to. So it's really we're setting the foundations up so we do have a financial services industry that can adopt what's coming forward and then start to better serve their customers. Because at the moment, it's a very niche market. And you got to know who's in the zoo to actually go get these lens of advices. And for mums and dads, they're like going, I don't know, it's all a scam. I don't know what I'm doing. So we need to really take that steady approach, because that's how we're going to get adoption.
Yeah, I think there's probably a couple of different things. I think it's the steady adoption here in Australia. I think Australia is, I've been in the country 25 years, a very balanced country, relatively risk averse in terms of you look at global financial crisis and the stability of the big banks. You look at the fintech ecosystem, which is bursting with innovation, and so it's a matter of how you keep that innovative spirit. Obviously, regulation is always lagging here, particularly. But I think from a competitive perspective, it's going to be how can Australia make sure that they're not lagging behind people, because I think once things catch up, it's going to be a great market to be in. A lot of my clients, Katrina, to your point, like they're asking me about crypto. In terms of all my broker dealers, and again, it's how do you manage what people want, the market demand, and the legislation to comply with that. So these are some of the pain points. When I looked at that report coming out, what I liked about it was the list of people on there. And so it's not. You look down there, there's people you recognize, and I think that to me that's moving, we're trending in that sort of mainstream direction.
Yeah, well, we saw yesterday, Block Earner, who, again, they're the ones who have had a bit of a world of pain because they did get taken to court by ASIC, but they've now been able to get the confidence of the regulators. So now the very first time you can use your Bitcoin to stake, to act as collateral for a mortgage. And that's That's
That's
huge. That
incredible.
means you
Yep.
do not have to liquidate your
Mm.
BTC, which may create a
Yeah.
capital gain, and then
Not
stake
great for
it
the
to
property market.
actually finance for your mortgage. So these are like, wow, can you imagine? We would never have had to be able to have this conversation 10 years ago and to think that that's actually where we would actually be. But here we are. And that's just
Yeah.
because there's been it's been community driven, industry driven, but there's been a desire to have a conversation. Yes, maybe not as fast, but at the end of the day, should have enduring legislation and regulation for
Yep.
the next generation of startups to stand on top of us, and they know that they don't have to deal with what we've dealt with.
Yeah, I think all the great work that you both have been doing, and Katrina specifically in the blockchain world, I think, it's almost like the settling of the Wild West. There's going to be people that only heard of this story across the Great Plains, because I guess, what advice would you give, I guess, fintechs that are coming into the market now in terms of what they should be thinking about in terms of digital assets? Because I think that's probably going to be the next iteration of the fintech ecosystem. But any advice you would give to them?
I think if that's a good question, because sometimes I ask myself, if I was going to go a startup today and if it was going to be
Yeah.
blockchain, would I actually do it? Perhaps not. No, no, I love this industry. No, I love this industry, and I've loved what I've been able to do over the last 10 years. But I think the first thing I always tell people is, if you're going to get a level of curiosity about this, before you do anything and invest and put your money to the table, go to meetups, join industry associations, educate yourself to find out what you can focus on as your core and what you can actually benefit through collaboration and use, in working with other people, because it is a big thing. And tokenization of real world assets and digital assets is an ecosystem. You got to know where you sit in that ecosystem and what you're going to bring to that ecosystem to value add. So you got to know exactly what's going on, because it moves very, very fast.
Yeah, it changes all the time. I guess, Neale, like
Yeah,
what advice would you
yeah,
give?
just probably two. There's enough signals in the market. So one thing about Australian regulation is they tend to harmonize with the US, UK, and Singapore. So when you think there's enough signals there to give you direction, so I think that's number one. And I think number two, again, comes back to what Katrina had mentioned. What's your purpose? Like, why? I mean, there's a great opportunity here to unlock a lot of illiquid assets. There's a purpose there. So, there's one example. So I guess it starts with why. You can have all the MIMS and you can have all
Yeah.
these other
Yes.
ones, but at the end of the day,
And
what's your
there's
purpose?
and there's a history. Like, another thing too is research your history, because we've seen so many amazing startups come and go that were doing art and real estate and voting and all of that, right back, we're talking about years ago. But don't think that you're going to be the first one who's going to have this idea.
Yeah.
There's been a lot of people right back in history that have had these ideas, but timing is always a thing. Getting good developers that know how to build with this is another thing, understanding standards, the ecosystem. So do your research before you plunge in. You want to tokenize, I don't know, a title or something like that, or a record or music or something like that. Go find out who's done it before and hit them up and say, why did it not work? And what should I learn from this?
They might just hold balance sheet, treasury, balance sheet
Yeah.
strategy. I don't know. Maybe. I don't know.
Yes.
Maybe, Katrina, before we wrap up, I guess, what does success look like for you in 2030 in terms of,
Ooh.
the work that you've been doing, and where we sit now with from an Australian perspective?
Uh, if I had a magic wand, I would love to see that we're just ubiquitous. Like, we're just the digital infrastructure layer that underpins assets and allow them to be traded, but nobody actually knows. Everybody says we don't have to talk about blockchain anymore. We just
Yeah.
talk about the value we create and the transformation that we've made for people's lives to unlock value on their balance sheets and to ensure that we're actually accounting for these important assets and monetize or getting the value out of them so we actually are sustaining communities. But I just want to be ubiquitous, and I don't want to be talking about blockchain in 2030. I'll just be like, I don't want to be doing this anymore.
So when we're having a beer in 2030, it'll be seamless. Like I mean, if you look at the iPhone, now everyone it's part and parcel of everything that we do. So I think it's like when people get more comfortable dropping that blockchain and digital assets, are the digital coin here in Australia is alive and kicking. I think we'll hit the big time. So Neale, different question for you because you've been coming second in, so you're piggybacking on what Katrina's saying. So
Yeah, sure.
2030, what company will you be running in 2030 in the fintech digital asset space?
Wow, crystal ball. Hopefully, unlocking some real world asset sector. Yeah, unlocking.
You're not going to let us know what it is.
No.
So I think so I think there's obviously a great topic. I do appreciate both of your time to talk about kind of regulation and compliance. Then we end in something a bit more fun, than compliance. We know compliance is kind of a bit of a must-have. But this brings us to the end of our discussion. Thank you, Katrina and Neale, for your valued insights. Hopefully, everyone who is listening in found that to be useful and a bit of fun. What we'll be looking to do is send out a survey after the fact to get some feedback. We'll also be sharing the contact details for both Katrina and Neale and myself. We're sending out the 1 or 2 slides that come with that as well. The reason we haven't had too many Fintech Fridays, we've been in the process of moving offices here in Sydney, so hopefully people have a chance to visit us in 252 Parkline Place. Katrina, next time you come down to Sydney, I'll show you the little room. Neale and I have been freezing in this media room, so we'll get that fixed for the next one. So everyone have a great Friday. Thank you for your time.
Thank you.
Thanks. Bye.
Thank you.
Bye.
Thank you.